Stocks ending the day in the red as the retail sector weighed heavily on investors. Joining me now to discuss, Kevin Kelly of Recon Capital Partners. Well, the real story, Kevin, is the turnaround of the market, because in the beginning, first half hour or so, it looked like we were going to end up with 200, 300 points to the down, and it recovered, pulled back. It was in the red, but just barely.
Yeah, I think what you need to focus on is that retail is isolated from the rest of the market. If we look at earnings season, this quarter coming around, you have 87% of the companies have beaten, whether it's on the top line or the bottom line.
But not retailers.
Not the retailers, but 62% have beaten on the top line. You're seeing revenue growth, and we haven't had that for a long time. So the market is appreciating that because they think it can continue to go forward.
Although it's interesting, Apple didn't beat on revenue. They beat on the profit, but not on the revenue. Let me just ask you about something remarkable, at least it was to me, because for all the problems inside the Beltway, they had another budget surplus. I mean, they had $182 billion that they got because of all this tax money that's been pouring in. They were expecting a big deficit again. What's happening?
Yeah, 1 month bragging rights, but you need to look beneath the surface because it had to do with the way they
Actually,
taken their...
it's 2 months, isn't it?
Well, it has to do with the corporate tax receipts that they came in that moved from March into April now. But you need to focus on what the CBO is actually saying. And they're saying, listen, if we do get tax reform, that's going to bring government revenues down, right? That's the only way they generate it. And then we're starting to see an aging population that will burden the Medicare system as well as Social Security. Okay. So deficits are expected to widen.
As a supply sider, I disagree with your comments about tax cuts. I think sometimes they can bring in more revenue, and they have in the past. But I agree with you that may be one of the reasons why the surplus, because there are these huge tax hauls. I'm wondering, since we don't have the tax cuts yet, and since people's expectations have diminished quite a bit and companies are not spending as much, maybe the next time we're going to have a big budget deficit, maybe because we're not going to have as much tax haul. There's not as much money from the stock market as there was the first quarter.
Yeah, we had the $182 billion actually had to benefit from the rising energy that's come around. So corporate profits were up on the energy side. This dollar got weaker actually, so there were more sales, so there were more revenues generated that way.
But also because of all the market activity, so much market activity, and even though a lot of people were buying, a lot of people were selling, making a profit, they had to send a big chunk of that profit into the tax man.
Well, and also America accounts for 25% of the world GDP, and as the world is getting better, you're starting to see American companies benefit. So you're starting to see a lot of those taxes come in as well, as they're selling, the domestic companies that are selling overseas.
Are companies now holding back on investment because they're worried about what's happening with Trump?
Yeah, absolutely. I think they definitely are worried because they were promised tax reform, and you can start to see
they have had regulatory reform in a big way.
But financials have pulled back. Same with small caps. The Russell 2000, a lot of volatility is there. We talk about volatility being low, but that's on the large caps that benefit from tax breaks and benefits. If you look at the Russell 2000, you're seeing its volatility is actually elevated, and they haven't performed like the large caps.
But on financials in particular, you have a whole bunch of financial regulations that could be turned around internally without Trump having to worry about Congress at all. Wouldn't that turn it around for the financials?
Yeah, I think that's going to turn around, as well as the Fed raising rates. We're going to see their net interest margins increase. That'll help the banks actually generate more revenue. They've been saddled by the regulatory burden. They've been putting it into compliance, which is a non-generating department of their companies, right? Now they're actually focused on increasing earnings.